inside a well, life can get tangled. Might the money. Might the money. Might the money. I'm making money, Mike the.
This podcast or broadcast is for informational purposes only and should not be considered legal, health, tax, or professional advice. Always consult a licensed professional for specific advice related to your situation. Thank you. All right, this is Ephraim Simmons with Mike Up Money, and I have the efficiency expert, Jasmine Johnson, here. We're going to be talking about having clean books, going to the bank, and how to stay bankable. Okay, so Jasmine, the first thing we want to talk about, why isn't your word collateral?
Why isn't your word collateral? You mean like in business?
Yes.
Because not everybody holds to their word. People can change and situations can change. So even though you give your word, don't necessarily mean that the action or the process is going to happen exactly how you say it is.
Yeah, there's a new revelation that banks are saying. They're saying if your books are messy, your business is too expensive to trust. Also, banks don't.
You gotta have credibility when you go to a bank. You just can't say, "Hey, I want to say I want a credit line of $300,000" without having anything that's gonna support that cash flow for the $300,000 that you're talking about. You want
Yeah. Also, banks don't fund potential; they fund proof.
right? That's why you got to go in there ready with a business plan and your profits and just something. What is it? Assets and everything like that. Because if everything goes south up, then they gonna end up taking whatever from you anyway, right?
Well, when you deal with banks, they want to see order and structure. So they want you to have separate accounts. One for your business and one for your personal. In your business account, they want to reconcile monthly, and they want clean transactions. They don't want to see commingling in your bank account, and they want a clean P&L so that they can see how you're actually doing. Because if you can do well, that's your collateral. But if you cannot demonstrate that you have structure, that you have profitability, banks just not really want to deal with you.
I wouldn't either. Can you from a risk?
Right. And then the thing about it is when they go into your accounts, you got to be bankable, because I know, dealing it with tax returns, I see a lot of people when I go into their tax returns, they have everything coming out. Some people actually have transactions going to the liquor store almost every other week, and they have gambling coming through their bank statements. And then you want to try to explain to a bank that you are actually using your business account for business purposes. And so it's hard to explain to them that, you know, you are really doing what you're supposed to. And so, it's hard for you to get a bank loan because the bank can't take you seriously because you don't look like you're a serious business doing all these unauthorized transactions. Some people keep going to Macy's and the Neiman Marcus and all the other transactions on their business bank account. What you think about that?
Well, I think that's not smart. We've said in previous episodes that you're gonna run a business, and don't go and I guess do those. Let me have those random expenses on there. Now it's different if it's for like a company party or company dinner or something. This you can write off for, or what it is, an event that you're having, like a seminar or something. But if it's just random because you just want to buy or do excessive spending, then I don't think that's very wise, and that you should have someone managing that part of your business for you that basically treat you like a babysitter, saying, no, you can't do that. That's not, you can't write that off, and that's not part of your business structure, right? Or foundational purposes that you set in place when you start this business.
Well, I try to tell people you got to prepare to go to the bank. So, if you're doing that type of transactions, you really need to clean up that bank statement. At least have 3 to 6 months of clean bank statements before you try to even go to the bank. Because if they look at, most banks want to see the last 3 months. And if they see that type of foolishness run through your bank account, then, like I said, underwriting is not going to take you seriously in most cases. So, you have to prepare and you have to stop doing those type of transactions.
Or just not do them at all under your business bank account. Do it under your personal account.
Yeah, for some reason, I've been doing this for over 35 years. And for some people, it's just hard for them to understand that. You tell them over and over again, please stop going to the liquor store in your business bank account. Please stop gambling in your business bank account. Please stop shopping, going to places that is unrelated to your business in your business bank account, because really in the long run, it's going to hurt you. But just because you run it through your business bank account does not make it deductible as a deduction. But some people, they lower their taxes because they write off everything, and they kill their borrowing power because you don't have anything the banks can loan on. I tell people all the time, as a public service announcement coming from the banks, that you cannot loan on zero, and you definitely can't loan on less than zero. So you got to have clean books, a smart tax strategy, and no strange deductions. Because, like I said, everything is not a deduction. And so, if you have somebody in business, give them this PSA that the banks told me: we don't loan on zero, and we don't loan on less than zero. But what do you think are bank statement red flags?
Just to order, I think, our bank statement red flags. I mean, you just mentioned one of them, right? You said the alcohol and the excessive spending.
Yeah.
I guess making outrageous purchases. So, like, if you have like overdraft fees in there, if you got
Overdrafts.
weird, yeah, overdrafts, you got weird or unusual transactions, like 25,000 K going in and out repeatedly. Like, what are you trying to do with that? That could signal some type of fraud going on. You got grocery store, restaurant, vacation, like luxury expenses. You gonna have if your revenue isn't consistent within that account. If you got too much cash going in there, that also could be a red flag. Debt and loan, unknown vendors, tax issues, and then transfers between accounts can be another red flag that the banks look at. So I think that's a good amount of things.
Well, the three things that you did identify is overdrafts. Banks hate to see that you have a lot of excessive overdrafts in your account. Even though you have overdraft protection and they'll pay that expenditure, banks seem like you have poor cash management when you keep having a lot of overdrafts. And then when you have a personal spending mixed in, they hate when you have a lot of personal transactions going through too, because again, it makes it seem like your business account is a piggy bank rather than a business account. And then random cash withdrawals. Banks hate when you have unidentified withdrawals. It's like, if you're going to pay yourself with a check. Do not just show up at the bank and take money out, because banks have a feeling of they feel insecure because they really don't know when you're going to do it if you keep doing it over and over again. So, you got to really decide upfront how you're going to run things through your business bank account, what you should run your business bank account, and how you should pay yourself. I tell people all the time, if you have a banking relationship, you can do strategic, constant withdrawals. Like, if you're going to give yourself $1,000 a week, if they see $1,000 transfer from your business account to your personal account, they will feel good about that. But if you just come to the bank and get $5,000 out one week, $3,000 the next week, $10,000 the next week, they don't know how you're paying yourself, and it looks real, suspect. So, you got to keep clean books, and you got to really stop doing a lot of stuff that looks real suspicious. But the next one, we want to talk about clean books versus pretty books. So, when people think about clean books, they say, "Well, are clean books?" Well, there are things that's predictable. If I'm making, $15,000 a month and I'm spending $10,000 a month on the average of the last 8 months, that's believable, because that seems like a pattern, and banks looks for patterns. But if I don't deposit money into my bank account, then all of a sudden, bam, I want to get something, and I stop putting money in my bank account, that looks suspicious. And then because the banks be thinking like, well, how much money should you been depositing? Because one month you put $2 in, next month you put $20,000 in, next month you put $5 in. It's no consistency with that. And then, you got to have a means of supporting your income, because banks are looking for fraud all the time. And then if they may put your account on suspend, because they're doing investigations because, they just can't see how your money is coming into your account. So you got to have some way to justify how you're getting your money because all this with money laundering and bank fraud and people kiting checks, try to get money real fast out of bank accounts before the check actually clears. A lot they're looking for that a lot. What do you think about it?
I mean, you pretty much just said what it is. I don't really have nothing to add to it. I think you should be consistent with banking, and people that try to commit fraud are most likely going to get caught because the bank is going to notice their activity, and then they're not going to want to do business with them. Yeah.
Yeah, and the other part of it is I know I'd be watching social media sometimes, and there have been a lot of people that's been caught at the bank trying to cash checks, and the checks have been declared fraud. I know at one particular credit union, they would give you a check to buy a car, and I'm not sure if these people are duplicating these checks or what they're doing, but they're coming in and they're being declared fraud. And these people actually going to jail. And if someone gives you a check and tell you to take it to the bank, that's kind of foolish. I know I had this guy when I worked for the state. He used to tell me all the time when I was going to make the deposit for the state, I'm gonna give you this little note and just give it to the teller and bring me back the cash. I said, you must think I'm crazy. But a lot of times when people give people checks and tell them to take it to the bank and bring them back the cash, they actually are giving you a hold up note and they asking you to rob the bank. But if it goes wrong, you going to jail.
Yeah, and I received this fake check before. Just because I applied to this job and it was a fake job, but I ain't like giving them my information. It's just like, yeah, we'll give you this for starter cost. And I was like, yeah, yeah, whatever. And so it arrived, or it was in a PO box. So I went to the bank and I was just like, this fake ain't it? And they was like, yeah. And I said, what y'all should do is y'all see anything come from this person, this number, this account, y'all should immediately reject it or whatever. Because they was just like, we could tell what fake checks are. Like they're not gonna cash them. They're gonna be like, hey, that's fake.
Yeah. And then the people actually can go to jail. They don't realize, they thinking, well, I got this check. They told me to take it to the bank and they're going to give me, the check is for 10,000. They're going to give me $1,000 out the check once I bring back the money. No, you're going to jail. And if you do get that $1,000 check, they're going to still get you eventually and take you to jail because they have your ID. But with this podcast, we're going to have a 30-day bankability sprint. And we're going to teach people how to be bankable. Just in the comments, just put bankable and put your email address. And we're going to sign you up for this 30-day bankability sprint so we can show you how to be bankable with the bank. But another thing is, a lot of people, when they go to the bank, they don't know what to say. They go in and say, just give me $10,000, give me $20,000, give me X number of dollars. But you have to really go in there saying, basically, I want to borrow so-and-so because right now I'm making X number of dollars. If I'm able to buy this equipment, get this service, or do this, or hire extra staff, my revenue will go up by X. I tested a little bit, and then here's the proof. But a lot of times people don't understand banks are in the business of loaning money, not helping you with your business. If you do not give them a solid business proposal, and some of them don't care how much money you have in the bank, if they don't like your industry, they're not loaning you jack. And if you say, I need so-and-so to buy computers, they say, okay, I'll give you computers. I'll get the money for the computers. Just give me the invoice and we'll buy the computers directly. Well, I want to buy trucks, cars. Okay, that's fine. Just give us the invoice from the car. We'll buy the car directly and that will help you out. So a lot of times when people just go to the bank and say, I just need some operating money, and they be like, why? And they won't loan them the money. Have you ever heard anything like that?
I've heard of people being unprepared and then they have to go back and redo everything just to go back to the bank to then be prepared to get what they asked for.
Yeah. But like I said, a lot of people are looking for just operating funds. Funds they want, quote, to invest, especially in real estate. And the banks are like saying, no, we're not doing that.
Mm.
'Cause if you come in here, I don't care what kind of credit score you have. I don't care. Sometimes I don't care how long you've been a customer. If you don't have a good business reason for what you're asking for, we are not going to loan you the money. And I think that a lot of people say, we have a business plan. Banks look at a business plan, but if you can't show the bank how you're going to actually make money with their money, they may not give you anything. That's why I tell them proof of concept is always better. If I have a food truck and I'm able to make uh $20,000 a week, and need an extra $50,000 to open up an actual store, the banks will look at your bank statements and look at how you manage your money and say, well, this guy's already have customers and he already has revenue. If we give him the money to get a location, yeah, I believe he can 2X it, 3X it, maybe 10X it. They see something. If I'm doing repair service and I'm doing it by myself and I'm making 50, 60, $70,000, and I go to the bank and say, I need to get an extra $25,000 to initially fund somebody else because I already have a repair service I have a contract with, and I just need somebody else to come in and help me get this initial payroll as I add on new service lines. And, they will do that. But you got to always show the bank that what they're investing in is a good, solid investment and not something that they don't think that may pay off. When you help out with corporate finance, and how do y'all prepare to go to the bank if I have to borrow money?
We don't prepare to go to any bank. The bank just gives it to us because we're such a large corporation. And that's really with any vendor, with anybody that we have. They'll ask, hey, can I have a credit application or something? And whatever we just send them our file, like they ask us to fill it out, and we're like, we're not filling it out. You look at this and you call our people that already work for specific banks and get them to verify our stuff. Where corporate is different depending on how the big the business is, because we're a $1 billion company. It's more of just we can get whatever line of credit we want with whatever bank. It doesn't really matter. I know this because I have one. A bank as a business person. It's a pretty high credit limit, so it's not a back and forth or prove it. It's more of just this is I do this. This is talk to my people that work there, and that's this.
Yeah, see, I think that's one of the benefits of having something that's established. You don't have to do too much talking. Matter of fact, banks will hunt you down and say, can we give you some money? Because they see that you have a track record of making money. And I think as a small business owner, they should work more on the management of their business and the management of their bank accounts to demonstrate to a bank or any other person on the outside that I can effectively use capital to make money. And I'm able to.
And some people not good at managing their accounts and expenses and all the other stuff, so they hire an accountant. Um, which is if you're more based on operations and logistics, you need an accountant because you ain't gonna have no earthly idea on what's taxable, what's not, where to put what in what category, and spending limits and all types of things. So I advise if you're a small business owner and you're not good at accounting, then you need to hire an accountant. You got accountants that'll do your books for you for a fee. You got QuickBooks out there that'll do it for you. Just pay a little monthly fee. There's people that's just ready to do it, and you don't have to worry about it for a couple months. Then you go back to them, hey, here go all my paperwork, redo it, and go from there. Because you can't run all aspects of your business by yourself. You got to have people working for you. And if a little fee is all they're required, then do it.
Well, I have a caveat and a segue. The caveat is your accountant cannot control you. So if you have that credit card or that debit card, and you're going to continue to go to the liquor store, use your card for gambling, and go buy stuff at Neiman Marcus and Gucci, having an accountant is not going to help you because those are the type of activities the accountant or bookkeeper is probably telling you that you cannot do anyway, but you're choosing to do the same thing anyway. So, just having that.
We talked about that earlier about people that have bad habits, right?
Yeah.
I'm talking about people that want to be successful and they want to get their stuff in order and on track. That's a good way to get yourself in order and on track if you're not good on the back end of accounting and bookkeeping.
Right. But then I'm segueing into this. A lot of people see these ads where they have these automated bookkeepers that going to do the bookkeeping for you. And from my experience doing bookkeeping is a lot of these services, they put it into miscellaneous. And so you still don't have good books because everything's not properly put into the right place. And then some of this stuff they put in miscellaneous is stuff that shouldn't be in your business account. And basically, you can't create real categories for expenses and make them deductible if they're not deductible. I had one client, he was giving me some stuff for a tax compilation and he had condom receipts and stuff. I'm like, why are you giving me condom receipts? That is not deductible. But a lot of times people gather receipts and they bring them to their bookkeeper or accountant and they think because they spent the money, it is deductible. And it's really not because there's no category to put that in. And so, miscellaneous is something that banks look for too, because if your miscellaneous is real high, banks don't want to deal with you because they feel they have already figured out you really are just fluffing your books around. But the other thing is, if you're going to go to the bank, please prepare to go. Just don't decide one day, I'm going to the bank without your bank statements, your bookkeeping, your everything being in order, your tax returns. The banks want to see 2 to 3 years of tax returns. If you have not done tax returns, you should not be going to the bank. I do have clients that just pop up at the bank, and it makes it sometimes difficult because you have to go back and get all this information together. And some information, you just can't get together real fast because it's hard to find bank statements for 2 years sometimes for some people, and you have to wait for them to be ordered and all this other stuff. So just going to the bank, you have to be prepared to do that. But miscellaneous is a red flag, and a lot of people don't realize you just can't dump stuff into a category called miscellaneous because you cannot categorize it. And then you do have these apps that just say ask accountant or put it in miscellaneous because they don't know how to put it. And some of this basic stuff, unless you categorize it in the software that you're using, is not going to give you good statements. Okay. I know that since you work in corporate, I know y'all have a period of time that y'all close out your books every month. And it depends on how the transactions go. It could be a good time or it could be a bad time, but the books have to reconcile. I think a lot of small business owners don't do that. So what does it take for you actually to close out the books?
On the entrepreneur side or on the corporate side?
Just give me the corporate side, then we can bring it down to the entrepreneur side.
It doesn't take anything other than running reports. I mean, you can you play with numbers really because even though you might have expenses or costs out there, that doesn't necessarily mean you're not going to get paid for it because most of the time people end up owing our company money. So we account for that money in our books and we put the numbers in, even if they're not totally there. You don't necessarily have to reconcile the correct number each month, but you do have to make sure what billings do have to make sure that the billings and everything are accurate because we do a lot of forecasting because our contracts are so big.
Well, for the entrepreneur, the thing that a lot of times that happens is a lot of money does not hit the bank account. And that's one of the worst mistakes you can make because you cannot go to the bank and say, I make $10,000 a month and your bank statement only says two. And the other
Yeah.
$8,000 never hit the bank because you get received the funds, you put it into your personal account, you received the cash and you spent it, or you paid people in cash when you should have been paying them by some trackable means, either through a wire transfer or app or a check. But I think a lot of times, a lot of people cannot close out their books properly because they don't run everything through the bank. And that makes it hard because you have to somehow explain to the bank why all your money did not make it to the bank. And then sometimes when you do expenses, you got to explain, like if you go into the bank and doing these cash withdrawals, okay, you're paying your people, but you don't have any ledger or anything to support nines or anything like that to support those cash withdrawals. And then that makes it more difficult too. So, in the corporate setting, like you said, you run reports and they're looking for discrepancies and they're looking for things for you to look up that will not tie back into the numbers that's on your P&L or your balance sheet. But I think that one of the things that entrepreneurs need to understand is just because you're small doesn't mean that you don't have any accountability. And,
You still gotta take accountability for everything that you do.
yeah, still, we want to go back and talk about commingling again. Not that I want to be the dead horse, but I don't think a lot of people understand how bad commingling would mess up your relationship with the banks. Because, also, I want to say that it's a credibility killer because, like I said, once you see unauthorized transactions in your business account, it pierces the corporate veil and they can treat your business like it's not a business. And even though you have a LLC or incorporation, if they see these personal things going through your account, then if you go to court and get sued, they say, well, this person supposed to have an LLC, but they're treating this LLC like it doesn't exist because they're running their personal stuff through it. Then bam, you don't have an LLC anymore. Same thing about corporation or S corporation. And so, you need to have a business account. You need to use your business card only for business expenses. I think that the biggest explanation I have with owners when I question what they're doing with their business accounts, they say that I only have my business card on me. So I use my business card to do this thing right here. Okay, so
Excuse.
yeah, that is a reason, but it's not an excuse.
It is an excuse because if you talking about today's time when you questioning folks, no, you got Apple Wallet. You can add your personal cards to your Apple Wallet and use Apple Pay and do all this other stuff. So if they want to use their business card that's physical, that's an excuse. Like that's a lie. Like you most definitely can add all your cards to like your Apple Wallet or your Google Wallet or whatever wallet, and also you can also have other bank cards. So that's the excuse for them just not to do what they're supposed to do with their business finances.
Yeah, to me, it really don't make sense because I might have 3 or 4 cards on me at all times. One of which is my business card, and the rest, may be personal cards. If I pay my bills like I'm supposed to, my personal cards will have enough credit line for me to do what I need to do. But
Yeah, I
if
don't carry cards. I carry a purse, but if I need a card, I have it. But everything is digital. You don't have to carry cards, if you don't want to. Like, and it's with anything.
Well, then it comes back to the point. If I put my business money that is supposed to be for my pay into my personal account, then I can pay for personal stuff out my personal account. But a lot of people, like I said, they like to go get cash withdrawals and spend their cash. Putting money in your pocket is like putting money into an empty pocket. A pocket with a hole in it, because that money is falling out, and the next thing you know, you don't know where you spend $100 or $200 because 10 here, 5 here, 20 here. Next thing you know, there's no money in your pocket. But what do you think is the real reason people keep their books messy?
Because they don't want to be tracked, or they want to avoid text, and they want to do some suspicious stuff. And I mean, it can either be suspicion, and they want to be like they want to commit fraud or something, right? Or it could be on the other side of they just really just don't know how to do it, and they need somebody to do it for them. So it can be one of two reasons to me. Or they just really don't care.
Well, I think that one of the reasons they just don't understand that type of action is going to cause them future pain. It's like if I go every day and get me a big cheesecake smothered with chocolate, when I gain 5 pounds at the end of the month, what I did cost that 5 pounds. And the thing that's so unfair is I can eat one big cheesecake and it would take me hours in the gym to work off just that one cheesecake. And a lot of times people don't understand being messy with your finances, it will cost you future pain. No, you can't see the pounds, but when you go to the bank, you have so many questions for underwriting. And if you don't have a smart person that can answer those questions and kind of try to massage the answer so that it can pass scrutiny, then you really in bad problem. I know one person that has been in business for years. They have one day that they sit down and they go through all the business finances, pay all the business bills, and make sure things reconcile. As an entrepreneur, you have to find, just like you find time to go to the gym. If you go to the gym, you have to find time to just do what you need to do to keep your finances in order. And it has to be something that you just have to do because it's part of being in business. Accountability, when you are your own boss, you got to be accountable as a boss. What do you think about that?
What do I think about you being accountable as a boss?
Yeah.
I think that's very accurate. I mean, I think we even said that about 5 different times during this episode. That if you're gonna be a business owner, you're gonna be sloppy. You need to have somebody that's gonna do it for you, especially if you know your personality. And then if you're a business owner, this shows for business owners that want to improve, that want to be better at their businesses. So this is good advice to people that want to, be successful. Like sit down, like you just said, want to once a month, once a week, you reconcile your books, make sure you're on the right track, pay all your expenses for the month, and stay on top of it. So yeah, I agree with you. I mean, I wouldn't disagree with it.
Right. And the thing about it is with banks, borrowing wins and chaos is expensive. If you are predictable, if people can see where your money is coming in and out on a regular fashion, if you use your bank accounts like you're supposed to, that's the type of borrowing that wins. But when everything's all over the place, your money doesn't hit the bank like it's supposed to. You're using your card for anything under the moon. And the thing that is a pet peeve for me is people who have business cards and they use those business cards to go to gas stations and other places and spend less than $2 on a card all day. And you have pages and pages of those transactions. And then when you tell them that their bookkeeping cost is going to increase because of all those transactions, they want to act like you're doing them wrong. Why do you have $5,000 in the bank and you have 10 pages of transactions? Because you keep going doing things like that.
Then you basically wasting your person's time if they're going through your stuff. Like if you know you got a lot of stuff that's not supposed to be on there, or if you know you're doing it on purpose, then don't even hire a bookkeeper at that point. Do it yourself. Separate stuff or highlight stuff beforehand so you don't waste that person's time because, like you said, that time is gonna go up.
Yeah. Before we end this episode, I'm going to explain the difference between a bookkeeping and a tax compilation. In bookkeeping, someone's going through your bank accounts and they're reconciling mainly your cash and other items on your balance sheet and your P&L to make things make sense. And so you can have an accurate picture of where you are during that last month's performance. A tax compilation is what most entrepreneurs do. They run all their transactions all year and they take their receipts and sometimes their boxes to the tax professional and they want them to do a tax return. Of course, with bookkeeping, you have a P&L, you have a balance sheet and cash flow statement. But with a tax compilation, it's usually just put on a spreadsheet. It could be used for tax purposes. It's not, the bank's going to have that tax return, but a tax compilation is something that, it doesn't give you a balance sheet, does not give you a P&L. It could be converted to a P&L and balance sheet, but it's not used for that purposes. So therefore, if you're going to be an entrepreneur and you're going to be in it for the long run, you need to invest in quality bookkeeping so that you can always know how you're performing and you can make strategic adjustments during the year to make it work. Is there anything else you want to add?
Just don't be dumb and don't make bad decisions if you're going to be an entrepreneur.
Right. Well, we want to leave out with these closing points. Your business isn't broke, it's undocumented. Banks don't fund confusion. Clean books equal cheaper money. The loan isn't denied, the file is denied. Stop saying I need money to get organized. You just have to be accountable, do what you need to do to make that money. Again, this is Ephraim Simmons. I'm your business strategist, and this is also
Leslie Johnson, your efficiency expert.
We're here for Mic'd Up Money. If you enjoyed this episode, please give us a like, share, and a subscription. If you have not subscribed to this channel, we on all social media platforms. And also, we would like for you to put something in the comment section so that we can see what you are saying about this or if you have further questions. Anything else you want to add?
Nope.
All right. So this is Ephraim, and we're out of here. Thank you.
That's a wrap for this week on Mic'd Up Money. Don't forget to grab your free tools at mic'dupmoney.com. Follow us at Mic'd Up Money on all social platforms and keep taking your next right money move. Until next time, stay reset, stay ready, and stay mic'd up.